All right. Just like that, Parag, we're live. Welcome back, everyone. Hopefully, anyone that's watching, welcome back.
Hello, everybody.
Parag, as usual, it's always nice to have a good chat with you. And
Absolutely.
today, we're going to continue on our commercial financing versus SBA financing. And I thought the topic that would make sense today was talk about how to put a package together. I think a lot of commercial clients in general, business clients, they don't really know how to put a package together for a bank or an SBA lender, whatever it is. And let's just talk about it and the differentiating points and stuff that can help out for our audience. It's around 12:02 right now. We're gonna kind of call it a day at 12:30. So we got a good half hour discussion. But before we
Absolutely.
start, Parag, why don't you do your general introductions and then I'll do mine and then we'll go into the topic.
Thank you, Sid, so much. Welcome, guys. This is a second segment, and I'm really thrilled on today's topic. My name is Parag Nivetia, and I own a company called Easy Funding Solutions. We are a business finance advisory and consulting company. Basically, used to be a banker for about 20 years and 27 years plus now in this field, trying to help you, business entrepreneurs, really understand the intricacies around finance related topics, and help you kind of improve your business overall. Um, and that's what Easy Funding Solutions is about as a business advisory and consulting company. Sid, thank you.
Fantastic, fantastic. And so for the audience, my name is Sid Vaidia, and I'm a commercial lender as well as a professional networker and all sorts of other things. You feel free to reach me at networkwithsid.com, or you can send me a quick email at hello@networkwithsid.com. I'm, been doing the commercial lending, been in the space now for close to 15 years. And I know Parag, this way, sorry, this way, Parag. I know you for way too many years. And me and Parag, we actually started the series last time just talking about the general differences between a commercial mortgage, both on the traditional and an SBA side. So for anyone that is interested in watching that, please go and watch the prior videos or just reach out to either one of us and we could surely definitely send you the link to it. But today, I thought it was an amazing topic, and Parag, you'll agree with me, how to put a package together. So before I started off with my piece, why don't you start off on the SBA side and start there, and then we'll kind of openly collaborate on that conversation.
Sure, sure. Thank you. Just getting my thoughts together. Listen, any business proposal that you want to make to somebody requires an executive summary. The Some of the problems that I've seen, and I'm sure you've seen as well, said is people, give you tax returns and say, here you go, can I get a loan? As opposed to putting some more pieces to the puzzle to make the puzzle look better. You
Yes.
paint a picture on a white canvas as opposed to just you drawing a face, right? You're painting a face. Don't just put the eyes and hair. You got to put the whole ears. You got to put everything on the canvas to show the right picture. So jumping into finance packaging, it's really an executive summary is the umbrella below which you have different line items. But if you have the line items and if you don't have the summary, it doesn't serve the purpose. You got to have, who you are, what you're trying to accomplish, why you're trying to accomplish what you want to accomplish, and why did you choose this group, and do you this business, and do you have the right people like a team. Just a very simple 3/4 page executive summary is very, very key to any package to begin with.
That's valid, very valid. Very valid. And you know what? In the my space, we also having an executive summary, kind of like a background worksheet, whatever you want to call it. But ultimately, it's the same thing. Just tell us the who, the what, the where, and the why. I think something that early on in banking, both of us will agree to,
Who,
and of course
what,
the how.
and how you're going to get to where you want to get. I mean, it's so you gotta people. We're trying to help people understand that if you put the executive summary first and then you dissect it down, now you got the who, you got the where, you got the how, you got the when, and so Now you talk about, okay, you got tax returns. If you're buying a business, obviously you need 3 years of tax returns. For most banks, you need 3 years of tax returns. You need financials. Depending on which bank it is that you're looking at, some banks need um, financial statements and some banks need tax returns. And Sid, I'm going to let you kind of talk about that on the commercial side, but on the SBA side, it's always tax returns, folks. Please keep in mind, there's no SBA loans given on financials. SBA loans are given on tax returns. Why? Because in the closing stage of the loan, the closers have to do what basically is to get tax transcripts from the IRS and validate the tax returns that you'd given to them before you got the loan, when you wanted to get the loan, and they validate those tax returns with the transcripts. So SBA is all about tax returns. So get 3 years of tax returns, the current year's financials, P&L and balance sheet, 2020, 6 months in, try and get the bank the most recent financials as you can get to give them a better idea. Giving them financials as of February or March today doesn't really help. Doesn't help
No.
you, right? So you want to be able to be as current as you can on that. Yes, it's a problem. CPAs are busy with tax time, and you run into all those kind of scenarios as well. It is what it is, guys.
Yeah.
Tell your CPA that if they're your CPA to help you in business, I mean, listen, this is another thing that they have to do. End of the story. I mean, they have to do what they have to do. There's no excuses around this.
I get Parag, I get that CPA question all the time, that, my CPA has thousands of other clients. But I'm like, why are you worrying about that guy? Worry about yourself. Worry about yourself. I get that all the time. And I respect it. A lot of people, I respect it. Their CPA is a good friend, or some maybe family member or whatever. But listen, you need them. And it's not like you're going to go get a commercial mortgage every year. Maybe unless you're an investor or something, But that's very true.
It's so true. And like you said, to your point, it's not every day that you go and shake them up and tell them you need to give me what you need to give me. I mean, it happens once in a while, every couple of years. It's not like every day. So
exactly.
It's important, guys. Go back to your CPA and make sure you can get what you need, because the bank is not looking at your package if it's not full. Sid, you agree?
Yes. Completely agree. And so to add to Parag what you were saying, so on the SBA side, tax return is 100% key. On the actual commercial loan side, more traditional financing, the tax return is definitely a checkbox that pretty much I think every bank more or less will ask for. But on top of that, let's say that you as a business owner are now going to be operating in that location, then you may have actual financial statements, maybe a compiled. Maybe it might be company prepared, maybe reviewed or audited. Those type of what we call CPA type statements, they're also valuable to us, just to at least review. And of course, we'll put that as a, we'll need them as a financial document. I think, Parag, on the SBA side, it's not necessarily needed, but it's always nice to have them if somebody has them, correct?
Yes, but technically, cash flow statements are very seldom required on the SBA side. It's really the financials that kind of speak the language and demonstrate the ability to pay the loan. The whole EBITDA calculation that goes through tax returns. And if you don't show any concrete data on tax returns, guys, you're wasting your time. That loan is not going to get approved. So, there's a whole separate talk that we can have about how you make yourself bankable, which is what my company's kind of slogan is, but the fact is, if you don't show your stuff, financials, numbers on tax returns, it's not going to help you. So getting back to the package, right? So we talked about the summary, then we talked about business tax returns. If it's a startup business on the SBA side, you don't have existing tax returns. So there's a lot more emphasis given on projections. So on the SBA side, projections are key, right? Absolutely the key. If historical tax returns show enough cash flow, then you may not have to work too hard on projections in the beginning stages. But in the package stage, but it will eventually be required during the underwriting stage. But that's later on.
Yeah. It's interesting, Parag, you bring up the projection because the projection on the commercial side, we necessarily don't need it. However, I will say with the COVID-19 pandemic period, we are
Oh, no.
asking for it now. We are
Who
asking
knows?
because now we want to know that, hey, listen, one, sustainability is very important, right? And of course, anyone can say, oh, yeah, my business is going to be around forever because that's the person that owns it. They want to say that. But the truth is, let's get the numbers behind it to make sense, And so it wasn't something historically I'd ask for, but I'm doing it more and more now, and just making sure that, hey, can you financially afford it for into 223 or 224 or whatever it is.
Yes, exactly. So that we talked about. So now we talk about personal tax returns, right? We
Yes.
talk about we talk about personal tax returns that banks usually look for. Again, the most recent year, going back 3 years. Now, if you don't have 2019, for example, and we're coming to a deadline of July 15th, but if you don't have 2019 personal tax returns, give those 3 years of tax returns, 18, 17, and 16, but also give the tax extension filing receipt to your lender, as well as um, um, P&L balance sheet for last year for 19 as well, because you don't have the tax returns. So you have P&L for last year, as well as I'm going back, sorry, into the business. But from the personal standpoint, sorry, it is 3 years of personal tax returns and the tax filing receipt for the extension, because
Right.
that's what the lenders want. Oh,
we,
and
we have
add
the same thing.
W-2s, 1099s or W-2s to it. That's on the SBA side. Sid, what
Yes.
do you take on?
So on the personal side, we talk about tax returns. We want the tax returns of the individual. Also, if you are filing and you get you take distributions or whatever else, we want it with the K1s. So pretty much your business tax return, your financial statement, your personal tax return, all three of those, minimum 3 years. We need those things. And then going into personal financial statement, right, Parag? That's the
Oh
next
yeah,
kind of.
absolutely, absolutely. That's who you are. If you talk about the executive summary about everything else around, who you are is one very integral part of the loan, right, Sid? It's your
Totally.
assets, your liabilities, every detail about your income, expenses, your assets, and your liabilities. If you and many times, please correct me if I'm wrong, or chime in, Sid.
Yeah.
Many times we find mistakes on PFSs.
Yes. The biggest one is they don't balance. Or the other important one is the numbers on the details don't match the summary. So then it's like, what are you putting together? And a lot of people, they don't take it seriously. And I tell them that this document, this single document, is going to more or less may break or make the deal. And
It's
that shows
you.
you are exactly. I get that all the time. And the other one that I get all the time is, oh, I don't want to show my liquidity position. Do I need to show all the data? And I'm like, yeah, it's you. Like, what are you looking to hide? I'm not the IRS.
So two things over here, my friend. You're so right, and I'm smiling because on my seminars that I do for SCORE and SPDC, I basically tell the audience, it's the suit that you're wearing, guys. You're walking into a room, you're walking into a bank, you're walking into a room, forget bank. You're walking into a big room with a suit. A, do you feel good? B, how does somebody else perceive you walking in? Do they want to talk to you? And believe me, this is not personal, guys. It's not about putting you down. It's about how you bring yourself in. A PFS is that. It's how you present yourself. So agreeing with Sid's comment is, don't devalue yourself, folks. Don't devalue yourself. The less you show, I mean, imagine going in with a sleeve of a suit not there. How funny is that? Take a sleeve off and walk into a room with one sleeve on a coat, on a jacket. It's funny. And that's
Yeah.
exactly what it is. When you don't show yourself clearly on a PFS, personal financial statement, you're actually hurting yourself.
Yes.
And like Sid said, you're not the bank is not the IRS.
Yeah.
The bank needs to know who you are. But if you don't show who you are to the bank clearly, how are they going to make the best decision?
The other one, Parag, I get, and this is another one that I check, and you'll probably attest to this, and this for the audience. Hopefully, you're listening very carefully. You make W income, let's say, of 150,000. You've been making it. We see it on a tax return. You've been making it consistently. So where's the cash? And yes, you pay taxes, you do this, you do that, but you show your cash balance of $5,000, and then you show real estate value of this, and you show what happened to the $300 or so thousand dollars. We understand you paid taxes, but where did the money go? And that following the trail of money is super important.
100% right. 100% right. Again, we are talking so much about a personal financial statement over here, guys. What Sid just said was so important. Think about it. You tell me on your job, your paycheck, you make, I'm just saying $100,000. You make whatever you make on your on in your job or in your business. Now you have K1s, you have your Schedule Cs to show all this beautiful money that you've made. And when you open up a personal financial statement and you have the cash line on the personal cash flow statement, and then you say you got $15,000. All right, so
What?
slow down and think about it. If you make this much money, unless your lifestyle is upside down, which technically we see that also very rarely, but the fact of the matter is, if you're making money and you're spending money personally, then you got to save money. And many times, either you're saving or you're not saving. But what we've seen is most of the time people have the money, but they don't show it, is the point.
Yeah,
And
and we are not after you to grab that money from you. Believe me, that's not my goal. That's not Parag's goal either, you know?
all we're trying to do is to help you guys emote, project, present yourselves correctly to a lender, because that's what they're looking at, guys. That's exactly what they're looking for. Like, who is this person? We got the resume here, right? That, I mean, I'm jumping our list, but personal financial statement, right? Sid, I mean, that's one of the most important pieces of the package.
Yeah, and the other thing that I found on a personal financial statement that's, at least for me, very important is there's a handful of questions usually at the end of it that most banks or anyone that will ask for. Have you, committed a felony, filed bankruptcy, do you have blah 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 blah, whatever those things are. I sometimes get it where people are saying, "Why am I required to fill this out? I didn't do nothing wrong." I said, "No, you didn't do nothing wrong, but how am I supposed to know your answers?" And make sure, just be truthful, honest, and just fill the documentation out, because if you miss something, I hate coming back to you after and saying you missed it and it's your fault.
I'd love to just chime in on this. Sid, you're 100% right. Okay, so what I used to see when I was not when I was a commercial lender, when I was a lender, basically, what I used to see is many times people just omitted those questions. They just breezed through those questions, didn't even check off, didn't even. Now it's not the banker's responsibility, the banker's responsibility to even like do anything with it. They have to call you back, like Sid said, and have you redo it and
Right.
actually check off. You have to do it. This is a federal document. You need to be cognizant about what information you're actually putting in out there. But just be candid about filling it to its entirety, really, to make it valid. Otherwise, banker is gonna get back to you.
Yeah, and it creates just more tension and thought in the banker's mind, thinking that, why is this person not doing that? Like,
Hiding?
it's,
Are they
yes,
hiding something? I mean,
yeah.
it's black or white. You're just either you're showing it or you're not showing it. There's nothing in between. The other thing, Sid, I wanted to bring to your attention, and not yours, but the audience attention. You know that the personal financial statement should be good within 90 days, at least on the SBA side. How about your side?
So the personal financial statement we actually do for a longer period of time. So for us, depending on, each bank has worked differently that I've worked at, but on average, we usually collect one personal financial statement annually. And then depending, some banks may have an underwriting policy where you can actually carry it for almost 18 months. Now, with
No,
that said, though, that the actual, so let's say you come to me, Parag, today, and you say, hey, I want to get a commercial loan. I give you personal financial statement to fill out. You fill it out. Let's say we go this 90 days, 120 days to close the loan. Now, I'm not going to, I'm a couple of things. I'm going to ask you for liquidity verification. So whatever you put on that, I need to see proof in your bank statement, brokerage statement, whatever else. But two, I'm not going to ask you for another financial statement, personal financial statement, until next year.
my question, I think, was more in terms of when you're applying for a loan, that personal financial statement should be valid within 90 days to apply for a
Oh,
loan, as opposed to, you
yes.
know,
Yeah. I apologize. Yeah. In that case, yeah, a 90-day window. That's pretty much on average. If I see stuff like, I'll give you an example. The COVID period, some people, I'm getting a new package and they have a personal financial from, call it February, since they
mm,
filed their taxes around there or whatever, right?
mm,
I'll accept it, but what I'm going to ask him is, here's my blank document. Make sure the numbers make sense now. Not necessarily saying go refill the whole thing out since you have something already, but you have to make sense of those numbers, because your cash position in February was maybe 100,000, but now your cash position is maybe 75,000, and you
very,
need to
very
adjust.
important, very important, very important. Um, you know, absolutely, cash positions change. So you need to, what I tell people is within the 90 days, pick the highest phase where your bank balance was the highest, so that you can validate it through the bank tax return, bank statements to validate the numbers. But you're right, absolutely, all these pieces are very important in a package.
Yeah.
Absolutely. um,
Cool. So what else? I mean, we could talk accounts receivable, accounts payable documents.
um,
That's another important one, right?
I also wanted to point out there's something called
Yeah.
global analysis now.
Oh yeah.
So
Let's do that first. Yeah.
if you're buying a business or starting one business, if just to make it simple, if you're buying one business but you own three other businesses, also keep in mind and be cognizant of the fact that the more you show the bank upfront, the less the questions later on. So take your 3 years of tax returns on every institution that you have, and especially on the SBA side, I'll speak for that, is we need 3 years of tax returns on every institution that every company that you own, which you had control on over, or you had over 20% ownership interest in. So make sure that you give 3 years of tax returns on every entity that you have. I know it's a pain. I know it's too much of work, but unfortunately, it's the same on the bank side as well. Please be mindful and respectful of that, because the banks are not going to be able to give you money if they haven't seen every pocket in your pant. That's how I say it to people. How about your
Uh,
end on the commercial side?
we I like the pocket of the pen. Look, I'll give you a crazy scenario. I currently have a a prospective client that I'm talking to. There is one main borrowing company. There is two ownership companies. So this one company is owned by two companies, and those two companies are owned by four individuals each.
I know where this is
So there's
going.
8 tax returns on the individual side, times it by 3 years. That's 24 tax returns. That's 8 personal financial statements. That's 6 of the middle corporations that are owned by this one entity. So that's
There's three
6
years,
there.
3 years
And
of
then
tax
there's
returns on each of them.
so there's 30 plus documents here. And yes, for the banker, this is not as easy as you putting it together, believe me. But the thing is, this is a legal requirement. And this is what the institutions, and I've worked in Parag, you've worked at multiple institutions, I've worked at multiple institutions. Every single one of them asks for almost the same thing. So just do your homework and do it right from the beginning, right?
The more you give, the better it is on the other side, because there's less questions. Believe me, if you start cutting corners and giving 3 pieces of this and 2 pieces of that, that's a recipe for failure.
Yeah,
I mean,
that's completely in agreement with you there. And most most people will try to piecemeal it and say, and then so there's two actual, and this is not by no means a complaint by a banker, but this is more of a learning curve for somebody who's listening to this on the end side of what a banker and somebody like you, Parag, sees is one, you want to provide small little things to us one piece at a time, but at the same time you tell us that, oh, you're asking for too much. Well, we've always been asking you for the same thing from the beginning, but you've been giving us one piece at a time. So why don't you just do yourself a favor, wait a week, collect everything, and just send it all at one time? And we promise we won't ask you again.
It is so true. And this happens every time. It happens more often than not. Let's put it that way. And you're right. If you can get everything together in one format, 1, 2, 3, 4, 5, 6, 7, 8, done. As opposed to saying 1 and 5 and then 3 next week or 2 weeks later, that file is sitting in the corner and nobody's really working on it, guys, because you can't give a decision with 50, 60, 40% of the information not there. So we got 3 more minutes. What else do you want to cover?
Look, let's talk about the side documents that most people, depending on the type of product or whatever. But I on the commercial side, of course, I do lines of credits and mortgages and all sorts of stuff. But really, if I get a business that's even applying for a mortgage and they have a business entity that's like that's owning the building, I want to see the accounts receivable, the accounts payable, your inventory report, your bank statements. Those things are pretty normal. People think that, oh, why do I need to see that? Well, we want to make sure your business can pay the mortgage.
I mean, that's money that's supposed to come in and money that's supposed to go out. So if you don't give the accounts receivable, accounts payable, your aging report and things like that, the bank is not going to be able to get that part of the information or gather that part of the information from the package. So you're 100% right. Another important piece is the lease. If you if you rent your place, which is a lot of people, businesses rent an office space, your lease needs to kind of demonstrate on the SBA side 10 years or 25 years. With extensions, nobody signs a lease for 10 years. You sign a lease for 2 years or 3 years and get 5 extensions for the SBA side. So that, I don't know what's up on the commercial, but
no, we need to see a lease. Pretty much every single time anyone wants to do anything, we need to see a lease. We need to see, it sounds crazy. So if you are the business and the real estate you also own, we still need to see the lease between both of them. And you're going to say, well, why? Because, I own both of them. And I'm going to say, yeah, but the thing is, this is a 5-year loan. We need to make sure that you're at least going to be in your place for 5 years and not rent it out to Tom or Susie or Sally or something like that and kind of mess up the entire structure of the loan.
And add to that, the same point that you made, people should understand, guys, it's a business loan. Fundamentally, many people fail to explain this to you. And I mean, a CPA should be having this conversation with you guys. You're a person and your business is not you. You're a person. The business is a person. You could sell the business to somebody else. Now it's not you anymore. So many people fail to distinguish themselves, take themselves away, move themselves away from the business. And that's what Sid is saying, that you own the real estate and you own the business as well. But guys, wait a minute. It's two different entities. The company here and the company here, and anything can happen in between the companies legally.
It's a transaction at the end of the day between two different companies, and that's the way any company outside of yourself is seeing it. Also, it doesn't necessarily need to be a 10-year deal. It could be anything. We could be talking about 3-year, 5-year, 7-year, 10-year, 15-year, whatever that bank or the SBA product that you're looking at that makes sense at the end of the day for your situation, for the business situation. Parag, you know what? We're coming around towards the closing of this hour. Let's just kind of do a general kind of exit and just, today's topic was pretty, I'd say, really important, putting a loan package together. And you're getting two guys that are, one, I'm in the banking business. Parag was a former banker. Now he's making customers bankable. So he knows exactly what to do. Why don't you kind of close it off, Parag?
Listen, thank you everybody for those who tuned in. We want to do this on a 2 week, bi-weekly basis. So encourage you to join us, to watch and share as much as you can. Spread the message across as much as you can, because what Sid and I always wanted to do is educate people and give them more information so that you can improve your situation. So again, I do have a website, Easy Funding Solutions, that we've shown on the display. Please take a look at that. I have podcasts, just like Sid has podcasts as well. We both have podcasts. I have mine on Spotify, Apple Podcasts, etc. Look up for Easy Funding Solutions on YouTube as well for some great, snippets on videos, informational videos.
Awesome.
Until next time we meet again. Thank you so much, and be safe, everybody. Sid.
All righty. Hey, thank you again, once again, everyone. And for myself, you can reach me the easiest way, I'd say for anyone, by the way, to get a hold of me or Parag is Facebook or LinkedIn. We are always somehow connected to those, okay? So if you say, oh, I can't get on Easy Funding site or blah, blah, Facebook and LinkedIn, I'm pretty sure we covered 99% of the world by those two websites,
True.
So, again, our names are displayed on the bottom, Sid Vaidya, Parag Nevadia. Reach out to us. Let's just talk, and we'll go from there. Hey, until next time, pleasure. And Parag, thanks once again. And you know what? We're going to get the topic up and running, and hopefully you'll join us next time. Thank you.
You got it. Thank you so much, guys. Bye-bye.